Good morning. For the first time in over a decade, silver has surged past $40 per ounce. In fact, $41 today, triggering renewed interest across global markets. Oops, sorry, I've got some reverb here. This isn't just a technical breakout, and we aren't technicians here, but it's a move back by macro momentum, industrial demand, and tightening supply fundamentals. Now, while gold continues to dominate headlines and usually does, hitting an all-time high of 3,500, just over that, amid rate cut expectations, dollar weakness, silver is quietly outperforming with a 36% year-to-date return. Yep, that's right. Silver is leading the charge in the precious metal space, outpacing gold on a percentage basis and reminding investors why it's often called gold's volatile cousin. So what's driving the rally? It's a perfect storm: declining real yields, a softer U.S. dollar, and mounting expectations of Federal Reserve rate cuts, all of which are breathing life into a non-yielding asset like silver, as well as gold. But to add to that, surging industrial demand. We speak about it often, but from solar, electric vehicles, and next-gen electronics, you're looking at a metal that's no longer just a store of value. It's being seen as a strategic material, rapidly electrifying the global economy. But here's a kicker as well. We're also on the fifth consecutive year of structural supply deficits, with few new mines coming online and investment demand spiking. The setup is clear. Silver is back. And this time, the move does look fundamentally sustainable. And the rise is very different than the chart than we look back 10 years ago. And the big question is, will it sustain? We do cover a fair amount of silver here, and we're lucky to have Peter Krause on, or Chris Marcus. Both are fantastic, as well as, kind of the grandfather of silver, David Morgan. We look to them often, for the really hard down specific commodity focus on silver, and we look forward to having them on soon as well. Of course, you should be paying attention to them and checking out their channels and their posts, because they dedicate their entire time specifically to one commodity, silver. And that's not just because they're diehard silver fans. It's because they know the fundamentals and they can see this coming. And we're very glad to be part of that giant story in the world of mining, with our focus on more CEO interviews and stocks and equities. The opportunity in silver is and has been arriving. Many of these equities have been doing well. And we're going to touch on, at the end of this, a couple stocks that in our Substack we'll take a peek at, because there are pure silver plays that one could look at, and we will jump into those down the line here. But when it comes down to the macro narrative, we do see that yields are falling and the US dollar is weakening. You could look at that from many different perspectives and points of view. It has been for quite some time, whether you're looking at BRICS and other countries looking to destabilize the US and moving forward. It's clear, for years we've been talking about the demand on all these metals and materials, not only because of the socio-political environment and the ideological and shifting of relationships and whatnot, but because of the reality of the critical metals that are needed. And if you don't like the narrative of energy transition or climate change, that's fine. If you don't like the narrative of electric vehicles, and yes, it's paused out to some degree, that's fine. You don't need to. There's so many narratives at play when it comes to the metals in the ground, that it doesn't matter what angle you want to take this from, whether it's the macro fiscal responsibility angle of requiring commodities, whether it is copper or whether it's precious metals, instead of holding US dollars, or quite frankly, any else's dollars. We've always said we'd much rather hold many of these metals than take any kind of dollar amount especially sitting in a bank. Now, of course, this is not any kind of financial advice to anyone, especially any retail, because you need to be speaking to your advisor and you have a whole plan. But most people didn't have any notion of any mining stocks or certainly any commodities or holding physical gold or even any kind of gold instrument. And we've been urging people to go talk to your advisor and have that conversation with them. If they're not following it, they need to be. And it isn't just a flash in the pan conversation. This has been going on for years. We've been talking about it for years, and it's going to for many years moving forward. There's no way around it. We desperately need the metals out of the ground. There's deficits in many of them. And it ties into, once again, that whole sociopolitical reasoning or reality that many of them aren't even produced or refined in North America or Europe. And that has to change, while you're also balancing the trade and tariffs from country to country as well. So in regards to yields, the gap between nominal bond yields and inflation has been sliding. And when yields fall, non-yielding assets like silver and gold become relatively more attractive, and especially holding cash, it's not so great. And metals start to look a lot shinier. Analysis shows that since January, U.S. yields have declined from around 2.1% to about 1.4%, easing the opportunity cost of maintaining a silver position, while at the same time, silver is up 36% year to year. So this kind of weakened dollar is another powerful tailwind, and it boosts the global purchasing power of silver priced in dollars and draws inflows from abroad. And we're seeing that markets are now betting on a 1 to 2% rate cut from the Fed, possibly this month. And that kind of dovish pivot also typically drives yields down and, once again, softens the dollar. So we're looking at a number of factors that arguably someone would say, well, they've just been priced in. So have you missed your chance? Well, once again, we don't trade here. Especially if you're commodities, you're definitely a trader. You're looking at technical analysis. You're looking at support lines and whatnot. There would be lots of people that will give you strong analysis as to, have we already seen that play out? Have we seen the big move and you're too late? And arguably, you could say that to some degree there could be a pullback. Sure. But long-term, which is what we focus on here, is long-term, taking the slow path, building positions into things. This is fantastic. We've been doing very well, not only in the gold and silver as a commodity, as a store of wealth instead of cash, but the equities are going to see lots of upside, to say the least. They already have been. I mean, we've talked about some of the gold companies out there that have done really well, and we're going to hint at a couple of the silver here as we go down the line here. But it is amazing in the last week, essentially, that gold surging past 3,500, and of course silver jumping over 40. These are huge signs that are showing, especially when we see the likes of CNBC focusing on these a lot. It's becoming more mainstream, and that's important. And people liken different periods of time when we've seen big industrial reshaping or big shifts, like the 70s, which were, and even 80s. There was a lot of political strife. There was a lot more decline and need for industrial boom. One could argue that's exactly what we're going through here in the West. Both different approaches, whether it was Biden or Trump, in order to acknowledge that we need to be mining, we need to have infrastructure, we need to have manufacturing, we need to have a clear pathway towards getting the things that make things, whether it's chips or whether it's robots, whether it's AI data centers, whether it's energy. We need to have a sustainable, clear pathway to those tightly supplied and hard to find materials. And even the talking heads out there that would acknowledge, yes, we need critical metals, and would kind of stop their story at a battery plant and go, well, that's as far as we want to talk about this, and we'll fund a battery plant for hundreds of millions of dollars. They never really wanted to know more than, well, do you know where those materials will come from? Because those same people create the narrative that mining's bad. And if you're a politician, an NGO, and you've staked your entire career over that narrative, that green good, mining bad, we need an energy transition, so we can't have oil and gas, you've put yourself into a corner. You didn't think it through clearly enough. And the great thing about equal opportunity to information today is that facts will always win out. The truth always wins out. It's just a matter of time. And people are starting to realize that, channels like myself and others out there We aren't just propagandists for, hey, I want you to get into junior mining. It's no, we want you to get into mining. I would like to help you in that and create tools and models that might help you, when you're talking to your advisor. I do want you in mining, but I want you in mining because it's giving you all the solutions that you want. We're giving you the truth, and it's taking a ton of education and a ton of effort to get people on board, and that's fine, because I find that's my job at the end of the day, and it's to give people the truth and just hammer it home, and to admit, in the parts that are hard to swallow, is that yes, is it a dirty business? Yes, it's not easy. And most things in life that are worth anything aren't easy. And we have to find that fine road between doing things environmentally sound and sustainable, while also economically responsible and logistically possible. And once again, that's not an enviable position to be in for any politician out there, which is why we try to keep that argument away, unless it's so blatantly obtuse and doesn't make any sense. And we're seeing a lot of great points, from Fast 41 to even some suggestions from Carney of hinting at developing ports up northern Ontario that could be critical metals hubs. I'd like to see that fleshed out and actually doing something rather than just let's set up a fund that studies that and puts more paperwork together. We're far past those bureaucratic funding type of plays where you just create GDP by taking tax dollars, giving it to some sort of group to do a study on something, and 10 years later not getting anywhere. Time is of the essence. We need people to make bold decisions and to be allowed to. And if you are a fan of AI and perhaps worried, it's had a big run, the only logical place to look right now that sincerely should, in all reason, in order to feed the pathway of AI and technology and robotics and chips, is to look at the infrastructure to develop to get those products to those companies. That's where there needs to be explosive growth, a lot of attention. Now, granted, I don't want to pretend like that's not a more boring side of life. There's not too many people that jump up and down saying, "Oh my God, an infrastructure play! How exciting!" It isn't. There's nothing like talking about technology and the what ifs that's more exciting. But if you're interested in making money and actually the pathway, as a critical thinker of where the opportunity is, that's where it is. And we're seeing that now, that people really started to kind of hone in on, wow, whether there is a political side or an economic side, precious metals are looking very attractive. The market's responding to it, whether it's the acknowledgement that, yes, inflation had spiked enormously because of lockdowns. And although the rate of inflation had pulled back, is that ugly head looming forward, with injecting trillions more dollars into the system? Well, once again, taking out sides of politics, yeah, it's likely that's going to have a very, very harsh effect. You need to get return on that investment dollar that is astounding. And it can't be just AI. It can't be just 5 companies. And even ones I like a Palantir with a PE ratio of 500 or 600. It's unsustainable. And people might say, I'll just throw this in there, well, Amazon had massive PE ratios for almost a decade. I honestly never liked the Amazon story. I know people will find that aghast when they hear that. I do like the Palantir story, although that has lots of hard truths about it as well. But as far as making money, they're very different stories. And the Palantir at a PE ratio of 500 or 600 is unlikely sustainable. In any event, we're not talking about PE ratios. We're not talking about even stocks just yet. We're still just talking about the fact that silver's up 36% yield year to date. Now, it's making it sound like it blew gold out of the water, but it didn't. Gold's up 33%. But the interesting thing is the volatility factor. It's got a beta to gold that is much stronger. But it's also the fact that perhaps people kind of nickname it the poor man's gold. it certainly is more attractive to the likes of even like a Warren Buffett because of that very strong and very real industrial factor to it. So if you are not entirely taken by the kind of fiscal inflationary, flight of capital to safety, narrative or angle or story, it's just as easy to go to silver as industrial use metal. And that's what makes it, that extra layer or kind of in the onion of interest where you go, wow, that's another dynamic, another angle to it that's very fascinating. The other thing that we wanted to touch on is it's not just, the chart of silver. Once again, if we look back at, over a decade ago, this isn't just a breakout where it just broke out and shot up to 50 and then it plummeted back down fairly quickly as well. This is been trucking along. The chart looks very strong. That's what makes people think, wow, this is a long-term stable growth pattern that seems to be happening. And once again, tell me if you see anything either politically, socioeconomically, financially, inflationary wise, that you would say looks really amazing looking forward. Everything is still very cautious, to say the least. And that's a growth environment for commodities. And the notion that even if you realized and toned down every conflict out there in the world, it's obvious that the West needs to have better access to critical metals. They need to have better logistics for getting it to places. The days of just shipping ore from one place off to China to then ship it back as another use metal or as solar panels elsewhere, it doesn't make any sense, particularly if you're an environmentalist. I mean, it makes sense economically because you could take, you can look at very cheap /slave labor in places throughout the globe. But that metric and that market, that isn't appealing to most people anymore. They don't find that's and it shouldn't. That's our argument as well. As much as we are fervent believers in an open market and in a capitalist market, it's that notion of once you go into that vulture capitalism, it's distasteful and it's ugly. And that's where we stand. I know that's controversial to a lot of people, but that's truly the way that we see it here. And what we wanted to just reiterate to people is that go to people, especially when you're looking at silver, that have, if you're like a technician and you want to look at like breakout moves and momentum and whatnot, there's lots of people that track, say, the silver ETFs at Sprott that will do technical analysis on that. That will confirm technically that there is momentum there, that there is breakout and further buying. There's lots of information and data, and it doesn't have to be from fundamental, from the fiscal side. It is this pattern. It is the technicals. It's coming from all angles, and we're seeing it, and that rise of it be sustained. And that's what you want to see from a chart, is this steady growth, because it's reiterating the narrative that we've been saying here, and many in the mining space, that you'd go to a conference and you'd hear a unanimous call that it's coming. And it's not just there's a cycle. The cycle has started in mining and commodities. It's been doing very well. It may not be the same that people remembered in the 2000s or the 90s, but the really big names, whether it's a gold company, are doing outstandingly well. We've done shows on it. They're just printing money. The silver ones, yeah, they're going to start printing money pretty quickly here as well. If we look at all-in sustaining costs of some of the companies out there, I think the lowest right now is Hecla. Now, Hecla in the last 5 days has shot up. So one might argue, I've missed the move. And Hecla seems to kind of trade off of that metric and that dynamic. It is a certainly more volatile chart than others. So we kind of looked at, well, who else is out there that might be worth taking a look at? There certainly are junior ETFs that one could look at, but really we want to look at companies that have a good ASIC or all-in sustaining cost that hasn't seen a move just yet, but that has that operational leverage. baked into it, or that's there that can be seen in 3 months, 4 months when they report earnings. And there are a couple out there, and we're going to post them on our free Substack as well. A couple ideas. We're not going to go into huge depth on them. The huge depth articles and the drill sheets that we do, those are in the paid Substack. Those drill sheets as well, we've sent them out to a number of companies and geos, and it's working. They're accurate. And we're very excited to see that we've created this model with AI that is pretty remarkable. We're able to just type in a symbol and pull out whatever data that we're looking for and give it a score, depending on the weighting that we think is valuable and the 10 factors that we think are the most attractive. And we've done that for exploration companies, and the data works, and we can backdate it and look at a year ago or 2 years ago. And would this company have predicted this outcome? Not a price. We can't even look at a price, but would it have shown that it was on track to hit milestones, that the continuity and grade were looking strong, that it was holding within the thesis? And that is very encouraging to see that. What we're refining now is a model that will work on the producers. And that is in one degree a lot easier, and another degree a little bit more difficult, because access to information in CDAR is there. They post their quarterly earnings. We can get all the metrics, all the ratios, they're out there, and people go through any kind of mining financial textbook and get them. And we're seeing those seem to be working quite well as well. And where these come in really well is that it gives a retail person a chance to get a score out of 100 to go, oh, this stock, doesn't look so good. This one does look very good. And it's a starting point. In and of itself, it would be of use to someone to narrow down what you should be looking at. For someone like myself, it's critical, because not only will it give me the good score, it also gives me a summary of where I should be looking. What are the questions I should be asking? And once again, I get to talk to CEOs all day and have them on shows and chat with them. And we get to put those questions to them. And that is a huge leverage for anyone who follows us, who watches us, who looks up Substack and reads any of the articles, and certainly for our paid subscribers, because they're getting that access right away. So we love what's happening in silver. We love what's happening in gold. We don't see any slowdown long-term. And of course, there's volatility in these markets, but the momentum, the entire thesis is still moving ahead. And we're very confident that we're entering very favorable mining movement, even when we're facing very challenging times here in Canada. But there are indications that if we can just get actual momentum in work, not studies, not this and that, actual producing, do something. This is the time, and we need people of action to be really motivated. And I think that's coming, and that creates a lot of turmoil and a lot of chaos. We see that in every form of life right now. But it's those that jump and say, "Listen, I'm done thinking and sitting on the sidelines. It's time to take action." If you wait on the sidelines for anything for too long, you're just watching and you're missing. And those that joined us early on, are quite happy. And we want to encourage as many people as possible to jump on, join the free work. Just join, hit a like, subscribe, tell a friend about it. And also, tell us who else you want to see on our show. But we really appreciate all of those that join us. It's growing and growing at a great rate. Take a look. We're going to do, First Majestic. We're going to look at Pan America Silver, throw in some ideas there. And also a couple ones that are mid-tier that really haven't been getting enough attention that might be worth taking a peek at. So anyways, take a look at the Substack. We really appreciate you guys following us and all the comments. We look forward to seeing you next week.